Good morning, everybody. Happy Friday, Friday the 25th, the day after Thanksgiving. Everybody is hungover from food. Everybody. Quickly, not going to waste your time. Not too many of you may be involved with today. I understand that. It's a half day. We close off at 1 o'clock. So, trading options, being that we're closing off at 1 o'clock, 3 hours are gone. So, at the open, it's basically right around 11:30 in the morning as far as the amount of time that's left on your options. Uh, Very short day, so we'll get right into it. Futures did trade during Thanksgiving, and you did get a fractionally higher high over on the Nasdaq, fractionally higher high over there on the S&P, and again, just been trolling along with what I was showing the other day about how the Dow is already to the August highs where the S&P SPX was at 4325 and the Nasdaq is right around where the S&P was at 3810, 3815. So very large disconnect between the two. But in any case, where we're at right now is very how can I delicious. Right now we have uh, coming off of Wednesday. 85% up to 100%, trading that 40-30, 40-35, 40-30 call spread. Had to wait, obviously, like I was saying there, waiting for pressure to be up there, waiting for pressure to be up there, right around 10 o'clock in the morning. We were close enough. 230, 245, the RSI's overblown, VIX right there. Somebody got 250, and then bam, as I was saying, really early in the morning, they're going to go worthless right around 1 o'clock. They did go worthless, even though we did get a little bit higher as we went into the later part of the session, right at the very end, and then we dropped down and we closed there below it. So again, that was my risk trade. That was the reason why I called it risk. But obviously, again, 90% of the time, risk plays out, and it did play out. Uh, Going into today, okay, again, you can't call anything what it is. This was last year, okay? This was last year, and we dropped 2.25% across the indexes. It was a major gap down and just absolutely fucking flat day. S&P closed at 45.94. The year before, which was shortly after Biden had been announced the winner and Pfizer came out with the cure for COVID, we were up fractionally about 8 points over there on the S&P, even though we did go a little bit higher in the early part of the day. Back then, you had the NASDAQ as your major driver. You don't have that anymore. So, again, something to consider. But I did some charts. I didn't pull them up, or I didn't pull the artwork up. So I'll just go into it really quick right here. The SPX, right here, right underneath 4060, you've got your 200-day moving average. Back in August, we went up to it and we tagged it within a penny. And then we had that major sell off from 43.25 down 900 points. Just above that at 40.64 is where we have that 50 retracement going to the March highs. And as you remember, I have been calling for 40.64, 41.15 for well over a month now as to where we're headed. Well, I've got a little bit of artwork that I'm going to share with you in the email that shows you here that we might not be as bullish as we really are, but more importantly, the way everything works out, because I'm not going to waste your time. Today is more or less a little bit of a wash. If you want to be involved with today, fantastic. If you don't, nobody's going to hold you to that because the market's open 225 days out of the year, 250 days. Uh, But heading into next week, you've got Jerome Powell speaking on Wednesday. You've got the jobs report on Wednesday. And again, just for this week alone, we're up over 100 points off of the low, or exactly 100 points off the low as to where that high was. So Should I be involved today and get the opportunity where we do get a visit up here to this 4050, 4060 area, I would be very strongly inclined to be looking at December 2 or the week after, December 9, puts on either the SPY or the QQQ using that support where we were earlier this week, right there at 39.54 over on the SPX. On SPY, right around that 395.50 area. QQQ is cut and dry. Easy peasy, simple squeezy. Right there at that 286 whenever this does pull up. Thinkorswim's a little bit slow this morning, but you remember there it is, 286. And again, you can see the disconnect here. Here's the 200-day moving average way up here at 307. This area right here is the September 13th CPI gap down. SPX is already at the bottom of that gap, which we already went into a little bit. So remove this here real quick. And again, you can see it. That's your zone right there, that 286 area. You got the 100-day moving average right up there at 292. So again, with the NASDAQ being your weak point, Apple's even down a little bit today, gapping down. I would very much be inclined to take a little bit of the profits that were used for the portion of this week and go and grab some puts for December 2 or even better for December 9 and be conservative about it. Here's your Apple. Actually, we'll go and throw the study up just to see where we're at because I know it's all together. Yeah. 200-day moving average up here at 155. 153, you got the average. And here's your 50-day moving average down here at 156. Apple 151 close, currently trading around 150 because of all the stuff that's happened in China. So again, it's not the greatest place to be bullish right now. And on top of that, the VIX has filled this gap. So, you've got this gap fill over here on the VIX. You've got the 2102 broken down here. As I've shown it before, great opportunity to take off the long hat and start looking at a little bit of a snack package of some puts and look forward to that heading into December 9th. If you want to squeeze it together because you got a cheap VIX, so the prices are cheap, you can get some December 2s as well. But those are the strikes that I would use. I love everybody. Love you more than anybody else. Have a fantastic Friday. Have a great weekend. I'll see you guys in the chat.